Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Tuesday morning market webcast. Okay, so look, we talked about coming down, testing some lows. We did that yesterday. 33.5 on the futures. Cash made a new low, 30 and change. They bounced it from there. We're printing 70. It was a solid day in the room. We got short 76. We were long before that and short before that. And right now we're long from 45, 46. We're taking some profits and we're letting the rest run. I'm not calling a bottom or anything by any stretch of the imagination. I just felt that into the close and into Globex that it needed to bounce. Kind of like that silly little walk-up they did Sunday night, which didn't last either. So the bears have to keep rejecting the rallies. They have to keep pushing down to the lows. The only thing left on the continuation contract here for the futures is the 25.29 low from February. So 25.29 versus 25.33 half on a March 19 contract. I don't know. I don't know if it's enough. I don't know if it's not. I don't want to think of it in those terms. I'm thinking of it in terms, in situations like this, like you take a March 19 contract and you go back out to February, you're not going to find price prints on most days just because it was a year ago. In those situations, I look at the continuation contract, which is why this is what I show you every day. And then, it's one of these rare situations where I will peek at cash. I don't like looking at cash because I don't trade cash. People love to analyze cash, the cash contract, but it has nothing to do with what I'm doing on an intraday basis or on a day-to-day basis. What I will say is that cash made a new low and that I would expect over time the continuation contract on the futures to at least go down and take a look at 29. It doesn't have to be today. I think we're due for a bounce, but we got a long way to go. And, calling a low at 25.33 half, I don't think is very prudent at all. So we got another bear market rally. You can be long. You can stand aside. You don't want to be early short. Early short, you're already down 30, 40 handles, depending on what you did. I would rather be long like I am, let it play out, take my profits as they come, and then, find where there is resistance, find where there are lower highs, and go ahead and take it down from there. What's a little more interesting to me is over on the hourly chart. Hourly mid-band has been a champ. Here, here, here. I mean, couldn't convert it. I mean, it's not going to bump its head on it perfectly every time. The point is, they haven't converted it. Okay? Now, we're over the top of it now. We're up into the daily pivot. I'll be curious to see if it comes back and holds as support. We shall see. If not, then I think we can head back up into the area of yesterday's highs, which was a test of 26.05, a test of the hourly midband that really failed hard. But if you convert it to support, then you have to seek price. You have a little blip up here at 80 quarter. If you get through 80 quarter and convert 80, then it's kind of an air pocket to the upside to go deal with 26.05. Not saying that's where we're going, just telling you this is what I'm looking at on the chart. So we're long, we're letting it run, we're letting it work. We made the week and then some yesterday, so we got 4 days to mess around with. As far as I'm concerned, I'll do things in other accounts, and this thing can run up all week for all I care if they want to do a multi-day upside rally. And that's the danger of bear markets. You can't get so ideological that you're not looking at both sides of the tape. We had a fantastic short, which we took off, the runner for 30, 33 handles, whatever it was down there. And then look, once they start making higher lows in here, then you take a shot long. We did it at, a couple minutes before the close, got our risk out, and then, you see what happens. Maybe it works, maybe it doesn't. But if you don't take those chances, if you don't take that risk, then you're not going to be able to benefit from situations like this. It's just a situation where after all of this, and I'm not talking about all of this, I'm talking about all of this, I mean, it could at least bounce overnight, right? So we'll see what RTH brings today. We still got an hour 45 to the open. So keep an eye on daily midband, keep an eye on daily pivot, keep an eye on 80, and then keep an eye on 2605. All right, everybody have a fantastic day. We'll be out with more stuff on social. Come check that out. Hey, come check us out. This is not a typical December. This is not a dead tape. The volatility is fantastic. And 2019 is going to be a continuation of 2018. I was saying to subscribers yesterday during the day, we talked in 2017 about how 2018 was going to be the year of the trader. Those who chose to believe me and have been in the room, 2017 was a great year. 2018 has been a fantastic year, even by our expectations. 2019 for me, and I'll say this a few times before the end of the year, 2019 is where 2018's chickens come to roost. The volatility is not going away. These unknowns are not going to become known. This market is not going to calm down. It is a fantastic trader tape. Come check us out. We'd love to meet you. Come see us now. Come see us in the new year. But whatever you do, you got to get in here. Take care. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.